me answer your questions now. I will answer them one by one. Okay, let's see here. Ali, so you suggest that we invest outside the U.S. as well? Yeah, but I suggest doing it through a mutual fund. I wouldn't try to invest directly, because when you invest directly, what happens is a lot of the protections that you have when you invest in the U.S. kind of disappear in other countries. But there are companies that run mutual funds that invest overseas. So I think that the best way to invest overseas is to go through a mutual fund. Employee stock options. That didn't look like a question, Ali. I'm going to say that employee stock options, if they offer them to you, then good for you. Take them, take them. But one thing you don't want to do is don't make the mistake of Enron employees and have all your money in one stock or something like that. Like that'll get you fried. That's not smart investing. Let's see. The system is not letting ask a question, says Valerie. Okay, well, if you can't get your question in the Q&A section, Valerie, just put it in the chat. I'll answer it in the chat for you guys. Kimmy, can you repeat the market for capital? I don't know what you mean by that. I think you were talking about the market when I was describing a market or an economy, or three of the key characteristics of building an economy. The three markets: the market for capital, the market for contractors, and the market for customers. The market for capital is basically where you have people that have money to invest and people who need that money. Like, so for example, when you watch Shark Tank is basically a capital market. It's a bunch of rich people sitting there and saying, okay, give me your best ideas and we'll decide if we want to invest or not. And we'll negotiate how much of your company I get to own by giving you a specific amount of money. So, Shark Tanks can be created anywhere. You can create a Shark Tank in your own community. In your own community, you can have a Shark Tank with your investment club where you get everybody in the club, get people that are serious. Don't get any people they're just going to be all talking, no action, but you get people that are serious together, right? And you all say, okay, in this club, to be in this club, everybody must contribute. We'll have, let's say we'll have 100 people, or 100, let's say 70 people. Each person's going to contribute $300 a month to an investment fund. It'll be their money. It's still your money, right? Because you're investing it. You're not giving it away. So $300 a month amongst, what was it? What did I say? I said 70 people. So what is that? Is that $21,000 a month? So we're going to build up $21,000 a month. So maybe the first year we don't do a whole lot of anything. We invest in maybe some stocks or whatever, just to put the money, have the money work for us. But we're not going to do anything major, right? So after about a year, you have $250,000, right? So then you start making money moves. You say, okay, well, bring me your best ideas. So what can happen is, great entrepreneurs can come along and say, I've got this great business concept. I need $10,000 to expand. I'll give you 30% of the company if you give me 10 grand. And then what you do is you say, okay, great. We like your idea. Send the paperwork, make everything legal, make sure our accountants can verify all the numbers. Whenever you make a business partnership and you invest with another person, make sure everything's verifiable. Make sure that you have access to anything you need to have access to get your money. That means if there's a bank account, you want to have a login to the account. If there's some system that keeps track of where the money came in, you want to be able to log in and look at that system and verify things visually yourself, or have somebody do that for you. But these can be great deals because if you are the holder of the capital, let me just say this to you. If you have the capital, you have the power, because the power in this world comes from having something that is scarce for other people. Capital is scarce in the Black community. So if you have an investment club and you guys have a few $100,000 even, you can find some just insane gems that you can invest in, real estate projects where you can buy the buildings for almost nothing and have to pay somebody to fix it up and resell it. That's one way. But the best ways to make money I've seen are when you have a brilliant entrepreneur who's severely undercapitalized. You give them that $5,000 or $10,000 they need to get started, and then maybe some working capital to keep things moving. Give them some connections. Give them a customer base. It can do well. Even with myself, I've done business with people where I've told them, I said, look, I like what you do. I don't want to do it myself, but I think you're good at it. I can get you some capital, and I can get you some, some people that might want to buy what you're selling. So let's make a deal, right? And it's great because then your money can actually work for you in a way that you can't work for yourself. Let's see, Daryl Lewis, is there a difference between ETFs and mutual funds? Yeah, exchange traded funds are a little more automated than mutual funds. Mutual funds tend to have a live human component. Also, mutual funds tend to have higher fees than ETFs. So ultimately, I think ETFs trade on a more automated basis. They're a little more fluid. Like you can buy and sell ETFs within minutes like that. Mutual funds, not so much. Mutual funds are a little bit slower, a little bit clunkier, a little bit more old-fashioned. So some people think that ETFs, with the existence of ETFs, you don't really need mutual funds as much, but there are some mutual funds that do add value. So don't think that I'm saying mutual funds are all bad. Charles Watkins, how many stocks should you have in your portfolio to be properly diversified? The theoretical answer is about 22 to 25. But truth is, I kind of believe in broader amounts of diversification. I think that the key idea is maybe trying to get a sense of what category the stock is in. And maybe what we can do is look at some stocks and I can give you a sense of where the category is. And we talk about ratios and how you can figure out if you're buying into a growth stock or a value stock. I would say at the very least with your apps, Stash, Acorns, and Robinhood, that you go through and look at Stash, for example, look at the different types of portfolios and just sort of mix and match based on what your interests are and what you like, where you want to be exposed, and it's fine. I think you can set it and forget it. I really believe that. I'm not a big believer that active trading will do anything other than drive you crazy or give you something to do if you like that kind of thing, but don't drive yourself crazy over it. Most people that become millionaires in America are what they call automatic millionaires. They just do this, the same amount goes out and they don't even know exactly what's going on in the portfolio. They check it once every 6 months, every year. Every year it goes up. Next thing you know, one day they're having a party because they finally, hit the $1 million mark. That's really how simple it becomes. Valerie, should I start investing a percentage of my income, or should I have a certain amount in savings and an emergency fund and then invest the rest? I'm looking at the 3-month emergency fund. That's a very good question, and really it's a philosophical thing. I do believe in having something in your savings, right? Now, do you have to have 3 months of expenses? I don't do that. I kind of like for my money to work for me. But the downside of that is that if you have to sell stocks and sooner than you expected, and the market's dipping, then you may have to sell at a cheaper price than what you want. But so the safe route is maybe pick a number that makes sense for you. Maybe you can say, okay, I'm gonna have 3 months of living expenses just in a savings account, but just know that money's not gonna be growing, it's not active, it's not working for you, it's just sitting there. And then at that point, invest the rest. That might be the way to go. It really comes down to risk tolerance. So because you and I have different risk tolerances, we have different preferences, but I can tell you that in that situation, there really is no right or wrong answer. It's probably going to be frustrating, but in finance, there are rarely any right or wrong answers, rarely any yes or no answers. A lot of things come down to it depends. It just depends. And so what I say to you is, rather than thinking of it in terms of what's right and what's wrong, I say you should think of it in terms of just knowing what you're getting into, knowing what it is, right? Knowing what risks you're taking so that nothing surprises you, right? So if you ask me, should I eat chocolate ice cream or strawberry? I'm gonna say, I don't know. Just make sure you know what it is. Make sure you know what they both taste like so you can make an informed decision, right? It's kind of the same way in that situation. All right. So I have had you guys here for an hour and a half. I always plan for an hour, but I always go longer. But I want to go until everything sinks in. I hope that our conversation has helped you today. I want to remind you guys that the recordings of every single lecture from this masterclass are available. All you have to do is log in at drboycemasterclass.com. That's drboycemasterclass.com. If you know anybody who wants to join the masterclass, feel free to send them to the page as well. This is something that we decided to do, and I'm glad you guys seem to like it, and it seems to help a lot of people. And we actually have a live version of this that we do as well. We did it in Philadelphia last week. Some of you all are here from Philadelphia, and if you do the live one, then I let you into the digital one, in addition to that, just as a thank you. So I'm glad you guys are here, and I see one more question. I will answer this question, then I'm going to go. Let's see. Daryl says, can you gift stocks? For example, instead of receiving toys for my kid's birthday, can I say, here's an E-Trade link and buy them a stock? Yeah, a lot of companies have custodial accounts. So like E-Trade, I think Stash has a custodial account. Google custodial, which companies have custodial accounts. Just Google that, because I saw a list where they had the 8 best custodial accounts, and I could have swore that like E-Trade and Ameritrade were on that list, along with, it was either Stash, Acorns, or Robinhood. I believe it was Stash, but they do have custodial accounts. What I would suggest though is that if you buy stock for your child, don't tell them that it's theirs. Don't make them think that they're just going to be able to go in and take the money and do whatever they want when they get 18. No. It's my money until I decide that I'm going to let you have it. I'm sorry, that's just how I am. Even in my trust and my will and all that stuff, when I die, it's still my money until the rules decide that you're eligible for this money. I'm like Shaquille O'Neal. Shaquille tells his kids, Shaq actually owns 10% of Five Guys. He's a very good investor from what I understand. Shaq told his kids, he said, if you don't have your college, your education, then you're not going to get my money. So he says, no, he says, what was it? If you don't have degrees, then you won't get the cheese. I think that's what he told his kids, so it's your money. Don't forget that. So, I suggest keeping control of it. The optimal age, me and my brother theorized about this. We concluded that the optimal age to start giving the children access to the money might be like 28. When they're young enough to need it, but old enough to protect it. But also make sure that you don't just hand them the money. Don't just hand them the car. Make sure they know how to drive the car. Because a lot of kids, with the economic culture in our community and beyond, just in the country in general, it's a very wasteful culture. So just keep that in mind. Okay. All right. So I'm going to get out of here, guys. It was great seeing you, and I will see you guys hopefully next week. I'll make sure the links are available. If you log in at drboycemasterclass.com, you can actually get the links for the next meeting. They should be in there. If you have any questions, any issues at all, email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. They will take good care of you. They will make sure that you're happy, and we want to make sure you learn. Okay, so I hope you guys are enjoying this, and I've had a great time, and I'll see you guys next week. Take care. Bye bye.